powered by Reviting, streaming from the Reviting Digital Studio. It's the David Daily. Exploring frontier technology, artificial intelligence, quantum innovation, and the intersection of faith, funding, and the future. Here's your host, David Goki.
Welcome to episode 22 of the David Daily Show. Very exciting today to talk about our current events for December 22nd. So moving right into our current events today, quantum computing stocks are facing a holiday shortened week trade. And actually we're looking at IBM first and foremost. IBM enters the holiday week with mixed narratives, especially investors are balancing the hybrid cloud and AI optimism with near-term trading caution for IBM as evaluation scrutiny and holiday season's headwinds shape consumer sentiment. And so we have IBM news here, very interesting. We also have quantum computing stocks are facing a very specific and interesting pitfall here where we see quantum computing stocks face a holiday shortened week test. So on the quantum side, we're seeing some very interesting things happen where quantum tech stocks, including IonQ and D-Wave, as well as QUBT, are entering a week with lighter trading volume and thinner liquidity, making even modest catalysts and more influential on price action. Very interesting. Secondly, we also see here that Coinbase is showing some interesting behavior where the stock's outlook and legal catalysts are showing ahead for this week as cryptocurrency bounces back. Coinbase is in full focus with upcoming stock trading rollout, prospects, prediction, market lawsuits. This is not financial advice. I'm not your financial advisor or your legal consultant, but we're seeing analysts, targets, and catalysts shaping the week ahead for the crypto exchanges stock into the holiday trading window. Very interesting. And then, of course, third, we see that IBM actually has this incredible stock week ahead of the mixed narratives. And as we move into Western Digital is actually entering into the NASDAQ top 100. Very interesting. Western Digital's impending inclusion in the NASDAQ 100, accompanied by the analyst targets and the watch points, signaling exactly how storage demands and many markets are intersecting with AI infrastructure expectations. We saw that last week. And then fifth and finally, we see that IBM is actually skilling up 5 million people, folks. That's 5 million people in cybersecurity and quantum by 2030. This is an incredible investment into not only frontier technology, but also cybersecurity and quantum. And so that actually ends our current event section for today. Thank you for watching. If you are tuning in for the first time, please like this video, comment where you're tuning in from, let us know that you're watching the current events, and subscribe as well. So with that, we move to our second portion of the show, which is our funding, faith, and future tech segment. And I'm so incredibly excited today to have none other than Mr. David S. Rose with us today. He comes to us with lots of experience in funding, faith, and future tech. David, welcome to the show.
Yeah, good morning. It's a pleasure to be here. I mean, this is now the David Show, clearly.
That's so fun. I love it. Yeah, I'm so thankful for our representatives bringing us together and getting to know each other. I'm curious, tell the audience just a little bit more kind of about who you are from birth to now and your background.
Oh, that would take probably 5 or 6 hours, but essentially I am a 5th-generation serial entrepreneur turned 3rd-generation angel investor and 1st-generation VC. I've been starting companies since I was probably 10 or 11. I have been funding companies for the last couple of dozen years. I'm the founder of a group called New York Angels, which is one of the world's largest, most active angel investment groups. These days, I am the founder and CEO of the U.S. real estate market, which is a new venture in the real estate capital market space. I've written a couple of New York Times best-selling books, the standard textbooks on how to be an angel investor and invest in early-stage startups, as well as the standard textbook on how to be an early-stage startup called the Startup Checklist and create a scalable, high-growth business. And then for the future part of your universe. I'm an associate founder and founding track chair for finance, entrepreneurship, and economics at Singularity University, which is the first of the major think tanks about future studies and exponential technological growth, with people like Ray Kurzweil and Peter Diamandis. So I sort of cover a bunch of bases here: starting companies, investing companies, looking at the future with Singularity U, teaching, writing, and I'm delighted to be here.
Awesome. I love that. And it's so interesting starting a podcast and building a daily consistent practice, not only with current events, but also with faith, funding, and future tech. Seeing your biography and your perspective, and your name is David, like, what an opportunity to have you on the David Show, literally the David Daily. It couldn't be a better fit. So we'll jump right into the first topic to keep this lively. And we do have an audience that will spin up across all major platforms, which is great. So quantum computing, I mean, let's just start there, right? With early stage investing in your deal flow. So in terms of the funding side, I've gone through being bootstrapped myself as a young kid. I started a business at 13, building websites and doing graphic design, just trying to get my name out there. Also have been part of a startup called Grab TV that had about 5 million or so, 5.3 million in pre-seed money, actually. So, lots of friends and family in that round for Grab TV. This is public knowledge, but never really Series A or Series B. So kind of as we go into this first topic, when you're talking about deal flow, what are some of those early signals that indicate that a team, an idea, or the numbers are going to lead to smart allocation?
So there's no one thing, and it's actually a whole holistic look at the company. I've put together a fundraising 101 video, which is available on YouTube. Just search David S. Rose Fundraising 101, and you'll get a full hour-long dump of what the whole process looks like. And it's important for founders to understand that it is a process and that it is holistic. There are no magic beans that you could plant that will somehow give you a Series A round. Instead, investors are looking at a very, very crowded market, and they are looking for businesses that have a great team who can implement this new idea, who have a business model that is scalable, and that if you start small, actually has the potential to grow big and very valuable so they can make a lot of money. And then finally, number 3, has traction, has shown that you have somehow managed already to create some value that people are willing to pay for. And so if you look at the 3 core things, that would be it: the team and the business model and the traction to prove the business model. And then there's a whole lot of other stuff behind that relative to you as the person and the team and the business and the market, what you're doing and so on and so forth. But realistically, it's a question of, that's the video right there, the Fundraising 101 video. One of the other things that I've done is I founded a company called Gust, and many of your listeners who are startup founders may be familiar with Gust as the platform that connects startup founders to early stage investors. So the Gust platform, which has now been around for over 20 years, has over 1.5 million founders on it and provides the back-end infrastructure for a large number of the world's leading angel investment groups. And it's a great way to get your startup in front of angel groups, but also over time, we've developed everything from a company as a service platform, the first CaaS platform, as we call it, which will let you press a button and incorporate your company, spin it up, do all of your post-incorporation legal and so on. And then we have a mentorship program effectively for startups called Mission Control, which is a monthly online platform where you get open office hours with me and our team, and you get experts coming in advising you. And it's a really helpful way to get grounded and introduced to this whole world of early stage funding. When I was getting my first round of outside funding, I had not a clue as to how this worked. I happened to, for a whole bunch of reasons, luck into a great VC who walked me through the whole process. And I was a total, in a bad world, it would have been a lamb to slaughter. But in this particular case, they were really wonderful and solid people. And I learned a whole lot from doing it. But I had no idea how this worked. the world has changed quite a bit since then. And today, with things like that, the video, the Fundraising 101 video, you can actually learn how the whole process works. So you go in with your eyes open. And the key thing here is holistically, great team, market you're approaching, business model for the company that you're building into this market, and then traction to show that you've actually created value so far.
Wow. First of all, thank you for that. That is absolutely incredible. If there's an if there's an action-packed soundbite, you definitely had that. So if we can clip that with the team, that's going to be such an incredible little sound bit. What I heard you say is there really is a community aspect to that launch pad and surrounding yourself with the right people. I really like that idea of, in that early stage investing side, really surrounding yourself with the right team. And as you know, battling a couple storms together, right? Like the statement, never take a sailor into a storm who's never been in a storm before. So always ask your captain if he's been in a storm.
That's partially it, but it's more than that. Starting a company is you're starting effectively a living organism, an entire thing. And just so you wouldn't start a person with just a hand or even just a brain, right? You need to start a company with all of the various things. If you think about, the world's biggest companies in terms of employment, right? So McDonald's, probably has an assistant vice president for chicken purchasing in the East Coast, right? On the other hand, if you're running your own hot dog stand on the corner, and you need to get chicken for your shawarma or whatever, you yourself are the assistant vice president for chicken purchasing on the East Coast. So you're playing all of those roles, and not all of us are perfect in doing everything, every role that a business requires. And so that's why it's helpful to have a team up front, and investors, when they're looking at companies, want to know that all the various aspects of getting a company are covered. And as a one-person founder, you have to do all that day one. But a team helps you share the load, helps you have people who are experts in one area rather than another. And a team is often, not inevitably, it's not an absolute requirement, but for many people who look at startup companies and for many investors, a solid team that is working together and has an appropriate division of responsibilities is a better bet to invest in than a solo founder. Solo founders can work, but it's much tougher to do it without anybody on your team beside you.
Yeah, I love that. The idea that you need good quality team members, but also product market fit as well, good market conditions, as well as runway that's going to prepare you for getting funded. So keeping on that topic of funding, I kind of want to take this two tracks. The first is for an early founder or founding team that are pre-Series A, and they're looking for funding specifically maybe to drive additional revenue on an existing product market fit. They validated that. They have maybe a couple customer pilots, and they're looking for funding to get to that next stage. As someone who has experience with raising over $1 million of funding yourself, what perspectives or strategic advice would you offer to a young founding team who has some traction, but they're kind of running out of runway?
Well, runway is always a challenge, right? And so the essence of being a startup founder is you got to make do with whatever you can do, whatever you can get. And so the first of all, if you can avoid taking funding from any outside investors, that's great. I'm speaking as an investor, and I'm saying don't take my money, because you will build a stronger company if you can do so without relying effectively on the crutch of cash. Now, sometimes you have to raise money. You're building a nuclear power plant. You can't do that out of your pocket. But these days, in terms of a SaaS business, in terms of something that is online, something that is infused with AI, eventually in terms of quantum, you may need to be able to do it yourself before you get cash in. But then in terms of finding cash, there is sort of a sequence. And the traditional way of doing this, the very first money coming in is from you. If you don't put your own cash into your own business, I guarantee you nobody else will do it. To which if you say, okay, I don't have any cash, well, what do I do? Everybody has some cash. If you can pay for a podcast, if you can pay for your internet connection, you have cash. It may not be a lot of cash, but it is cash. And the important thing to investors is not how much you put in, but how important that cash is for you. If I was looking at a 12-year-old entrepreneur who had been running a paper route for 5 years and had amassed $2,000, and they were prepared to put $1,000 of that into their new venture, that's perfectly fine. That's half the money they have, right? On the other hand, if Elon Musk was to come to me and would like an investment into his new venture, I would expect quite a bit more from him. So the first money has to come from you. And when that gets you started, then the second money typically comes, the historical expression is 4 F's: friends, family, fans, and fools. People who love the product, people who love you, your family and your friends. And these are people who are investing in the business, not because they're looking to make a lot of money and they know anything about the domain or the business, but because they want to support you, they have faith in you, they trust you, and they're betting on you. And so typically that's the only place you're going to get the next piece of capital from, people who are effectively taking a bet on you. And if you can use that to actually produce something and show that you really have the potential to create value here, then and only then are you ready to go out and raise money from arm's length third parties like angel investors or accelerators or ultimately VCs and the like. So first cash from you. If you have to, try and do it without cash. Try and do it without cash. First cash from you. Second cash from the 4 F's, people who are doing it for reasons other than official third-party economics. And then the third is early stage angels, accelerators, and then you're on the path to outside funding from VCs and down the road.
Wow. First of all, I've heard that spoken many times, David, and I think that your perspective has a lot of real good clarity, right? And I saw a couple questions in the chat come through. All right, so I like the 4 F's, right? You have your family, your friends. Hey, Uncle John, I need 50K for 3 months of expenses or whatever, right? I was like, all right. Hey, Auntie Susie. I was like, all right, now I got like great grandma, like Joni, and then it's like, all right, then I finally get some friends in on this little party. Maybe I've raised a couple
Yeah, but it's not.
$100,000 by
No,
this point in time,
let
right?
me reset the expectations here, right? It's
Right.
not a casual, oh, grandma, give me a few $100,000 to go do this, or hey, Johnny, you're going to let you in on a hot thing, right? This is you really have to approach this from a really rational, thoughtful,
Right.
professional basis, which means you really have to do for them, for them to take you seriously and have faith in you. Everything you would do for an angel or a VC, really serious business plan, business modeling. I actually wrote a whole book about this. It's called The Startup Checklist, 25 Steps to a Scalable High Growth Business. It's a New York Times bestseller, but it walks through all the things you need to do to get a company started. And even if you're going to family and friends who are doing it because of you, you don't want to let them down. You don't want to have them just, fund a whim of yours. You really have to go all in, put your own money in, and then very earnestly realizing that for them, they're not professional investors, but for them, this money means something serious. And you're asking them for a serious bid because you're serious about what you're doing. So that's the zeitgeist you've got to bring to the ask.
Yeah. No, I absolutely love that, David. And I use this phrase of equitable exchange of value. This idea of how do I have kind of a handshake, but also saying like, you're bringing something to the table which has value, how can we work together to be able to do that?
Well, but
And I think in those early
that's
stages
not
can
the
be
case.
difficult
But
too, right?
remember, in terms of the 4 F's, in terms of friends and family, your family, the value that they are bringing is money. They are helping you, but they're not bringing it as an exchange. When this is not an equitable exchange of value in the friends and family round, right? Because they are doing this not because they're professional investors, but they're doing this because they love you and support you. When you get to the angel world, the professional third-party investor, it is an exchange of value. They are putting in cash and you are providing equity in your company. And that's a serious thing. And they are going to want to, as far as you're concerned, your company's worth $1 billion or will be. As far as they're concerned, you're a young startup, and they want to know that they have the faith that ultimately you will be able to create the value that is worth them putting in their very risky capital up front.
Yeah, I'm glad you mentioned that. So maybe we'll just focus a little bit on that friends and family round. So you have people who are supporting you. At what point do they get their money back?
Well, that's the question, right? They are not professional investors. In many
Right.
cases, they are not what are known as accredited investors. And so, according to the SEC rules, the only people who can invest money into your company in exchange for equity and ownership interest in your company, and ultimately a share of the profits and so on and so forth, are people who qualify as accredited investors, which means that they either have over $1 million in investable assets, not including the value of their home, or they have a steady income of over $200,000 annually, or $300,000 if they file jointly with their spouse, or they are a sophisticated financial professional with SEC licenses, right? So those are the three qualifications to be an accredited investor. And so you can raise whatever money you want for people like that. But if your friends and family are not accredited investors, then there are a lot of rules around it, right? And the realistic answer is the only way you could get money, take money from them for equity in your business is through a crowdfunding platform, an equity crowdfunding platform, like WeFunder or Republic or Start Engine or folks like that. That's a special exemption, but you have to go through those platforms, and those platforms tend to be very picky, and they expect that you will come to them with the money effectively already raised so they can provide the
Right.
tooling to
Right.
raise it.
Yeah, thank you. I appreciate that. That's a really great introductory lesson for those founders who are looking to raise some money from an unaccredited investor. I really appreciate that. So the second part of that, which you're alluding to, which is really the bulk of your experience, David, is this idea of funding beyond the four Fs. So now you have that accredited investor. They're either a wealthy individual angel investor themselves, or they're a GP or LP of a larger firm, or maybe they're actually a conglomerate of firms. How do you approach funding as you start to get more serious with a larger firm like that?
Well, again, at different stages, there are different kinds of things that are available. So, if you are a startup founder with a nascent, new, small business, you've got enough friends and family to get the company started, but you're now looking for, say, $500,000 or $1 million, right? That's a lot of money, typically more than you're going to get from friends and family, more than you have yourself, but that's also too small around to raise from traditional venture capital funds. And so, what do you do? That's where angels come into play, right? And so there are various levels. At the first, money is you. Then the what we call the hustle round these days. That's the friends and family and fans and fools and people, any which way you can get the cash in the door. After that, typically comes the angel round, which can be a known as a pre-seed round. And here you're typically raising hundreds of thousands of dollars at a valuation for your company in the low millions. And these are people who are arm's length, rational investors. You don't know them. And so they're not investing because they love you. They're investing because they think they can make money. And that's where you really have to convince them that the business that you have and you are building has all the things they're looking for, right? Including the team to be able to execute a business model that makes sense and will ultimately grow into a scalable business, the market that actually has money coming in where people looking to pay money for what you're doing, traction, proof that you've actually got the business started and people are already paying you or have shown in some way that you've created real value. That's what those investors want to see. And then whether you go to an individual angel or a group of angels, there's a whole process for doing that.
Yeah, wow, that is so good. I mean, we could sit here and talk about funding for a really long time. And I think if you want to get the full details, check out David's book. He's got multiple New York bestsellers. So it really is just a joy to have this quality time with you. I sincerely hope that maybe our paths will bump into each other on the road. So the second part of this is faith. And not that we need to get too religious here, but we do like to have kind of the spiritual aspect of the show. And the topic that we picked today is really leaning into that leadership beyond capital and the conviction and the character and the founder support that comes with that. You yourself, David, how do you apply these types of principles to your leadership style? And what kind of founder support do you and your firm typically offer to founders?
I'm a great believer in character. And if you read any of my books or you've seen any of my videos about how to pitch and how to raise funds, the number one thing is integrity. And integrity and character, as you know, are often not exactly the primary currency of the world, are not exactly the things that are on the tip of everybody's tongue. But for some of us, apparently you and obviously me, they're really, really important. And so for me, if I don't have 100% faith in the integrity of the founder, I will not make an investment. And I'm not going to tell you, oh, hey, I don't trust you, or I don't think you have integrity. I'll provide some other reason why it doesn't work. But for me, a person's character and integrity really is the single most important thing. I try and lead my own life that way. I try and manage my own businesses that way. I use that as a litmus test for investing in people. And sometimes you lose out on investing in deals run by people who are very smart and very sharp and good for making money. But if you are not comfortable with them on a character basis, as far as I'm concerned, life is too short to go do that.
Yeah, I agree with you completely. And this idea of integrity is a very core concept to the divine masculine. So when people get, divine masculine, they're really in their divine masculine. You would say, yeah, I'm a man now of masculine character and integrity. And that first starts with honesty and ethics. I mean, I'm not an ethicist. I haven't been formally trained in a PhD or a master's program in a school of ethicists. However, I do contribute to an organization called AI and Faith that finds the world's religions and the world's wisdom and integrates it into technology as kind of an ethics as infrastructure approach. So I really like this aspect that you're saying, hey, you really have to know your convictions. Like I had a mentor once say, that you know in your knower of your knowers. And it's kind of like deep within your heart, you have this deep conviction. And I make a lot of mistakes. We all do. We're human. But that idea of saying, yeah, I want to, and I currently, and in the future, I will continue to be a person of character, of an integrity, have conviction, be passionate about something, especially when there's maybe something wrong or immoral, is really important. So as a person of experience like yourself, on the flip side, how do you weed out the bad guys, the bad people? How much trust do you really give to someone if they've either crossed you or you found that there is some sort of maybe character or value misalignment? I'm really curious to hear your perspective on that, David.
Well, my philosophy, all of my companies, since I began starting them as a teenager, have had the same motto. And the same watchword is everybody gets one chance to screw us, but only one chance. And so I go into every business deal, every investment, in the hopes and the expectation that the counterparty has integrity, has character, and is someone I can deal with for the long haul. And if I end up getting screwed, if they end up taking a sharp end of a deal or they end up doing things that I don't think are appropriate, whatever I lose in that transaction was money very, very well spent because I just won't do business with them again. And so I go in giving everybody the benefit of the doubt. Obviously, you trust your gut and your instincts, and you look for people who you believe have character similar to yours. And on the basis of that, you give it a shot. And you don't risk your entire life, career, family, everything on somebody you don't know. You typically do, a starting transaction, and you see where it goes. But so in my life, business life, professional life, you can think about it as a ramp. And over time, you build trust and you build faith in somebody, and you do larger deals, and they're more important. But the minute anybody steps off that integrity or character path, that's it. And end of discussion, and you simply move on because life is too short to deal with people you can't completely trust. And ultimately being a good person, whether it's the divine masculine or the divine feminine. And I look for both, frankly, in the same person. I don't, I think they're interesting names that provide a clue to various kinds of character traits, but I don't think that the divine masculine is necessarily male and the divine feminine is necessarily female. I think you can have both within the same person, and that's what I look for.
Yeah, I love that. This is so good, David. And I agree with that as well, that your divine energy does not align with your necessarily always with your assigned at birth. But we're not going to get into that. It's not a political show. This is just very much stepping into that. And I appreciate that. And that brings us to that piece about your advisor support. Now, as a kind of a younger guy myself, I still find ways to give back, to mentor. I was part of an organization called Yeah Mentors, YEA, for the Youth Entrepreneurs Association, that help middle schoolers and high schoolers start businesses through their local chambers of commerce. Of course, you've been a mentor as well to others as a founder and as an investor, and I would imagine a philanthropist. How do you really offer support to maybe those businesses that aren't, deploying your capital, and in addition to those founders and teams and investor groups that do have your precious resources, including obviously your time and your talent?
So mentorship is a strange word. Everybody thinks they know what it means, but they really don't. And the reason mentorship is misused as a term is because, unfortunately, most people in their lives have actually not had a mentor. A mentor-mentee or mentor-protege relationship is one that tends to be organic, natural, grows over time from being in proximity with someone and understanding what they are and who they're doing it, which is why it typically appears in academic worlds where you have a professor who has their proteges who they work with as students, or in a business environment where your boss might, over a number of years, months, whatever, decades, follow your career and help and provide guidance. And so you can't just click a box and say, yes, I'm a mentor over there. That's really more of an advisory relationship. And so part of the challenge is mentor relationships are so wonderful when they happen. If you have a good mentor who is in tune and has good character and has stuff that they can share, that if you can find a real mentor, that's a wonderful thing and you're very, very lucky. But most people in their entire lives, if they have one mentor or two over a long haul, will be remarkably lucky. So therefore, because it is so hard to find, everybody wants to find one. And I probably get literally 2 or 3 requests a day from people saying, hey, will you be my mentor? And obviously I can't do that for thousands of people. As it is, I have employees in my company, I have companies in which I invest, I have my own children and family, I teach, and so I try and do what I call scaled mentoring, which is on a one-to-many basis, and including podcasts like this, including books that I write, including speaking and lecturing and YouTube videos. And that's the way in which I can try and communicate the knowledge that I have and the approaches to character and everything else that can serve as lessons to help people when I can't do it in person.
I love that idea of scaled mentoring and having a large impact both on one-on-one basis and as well as your friends, your family, and others who you may be an advisor or a mentor to in that personal sense. As a husband, as a father, those roles, align with obviously your business and your investorship. There's congruence there. So I appreciate that. It's so good. And kind of as we're rounding up the show, we have kind of one last segment. So we have funding, we have faith, and of course we have future, which I'm very excited for because frontier technology is something that's always fascinated me. I recently, over the holidays, had a cassette tape that was given to me from a recording in 2007, which was kind of like an inspirational recording. So as we think about the future of technology, one of the things we focus on this show is emerging frontier technology like quantum, like AI. And so when you talk about emerging and quantum technologies, I'm really curious to hear, what is the investing landscape like in 2025 for that? And as we look into the future, where do founders need to see in terms of their investment of time and technology to stay relevant in 26? If you were to say in 1 year, David, by the end of this year, the founders that really survive and thrive on the frontier tech side, what will they be doing? How will they be behaving? And what technologies do you think will maybe even start to take off this next year? Maybe even looking out 3 to 5 years, if you were to maybe make some bold claims on the frontier tech, I'd love to hear what that looks like for you.
So it's even more basic than that. It's not a question
Mhm.
of which specific technologies. Again, just like there's no magic word in fundraising. Oh, we're
Right.
AI. Here's money. It doesn't work that way, right? And similarly, there's not one thing that's going to happen by the end of this year. The core thing, however, that is critical for every founder is to understand one word, and that word is exponential. So there's a great book called The Singularity is Nearer by Ray Kurzweil. And let's put a link to that in the show notes. And I would strongly suggest that everybody read that. The Singularity is Nearer by a guy named Ray Kurzweil. And Ray Kurzweil is probably the closest thing we have to Thomas Edison in our generation. He was a prodigy, a young prodigy as an entrepreneur, as a theorist. He began studying the future early on. And in a book that he wrote in 1989 that was called The Age of Thinking Machines, he predicted back then, before you were born, before probably many of the listeners of this podcast were born, that you would have machines that could think like people, that you would have effectively artificial general intelligence. And then 10 years later, in 99, he wrote a book called The Age of Spiritual Machines, in which he doubled down on his prediction and said, hey, you're going to have not only machines that can think like a human, but everything that a human can do. And now you begin to get in some interesting questions of faith and beliefs and so on, spirituality. His point was, if a human can do it, including being spiritual, then at some point a machine may well be able to do that. And that was a very interesting, groundbreaking kind of a thing. It generated a lot of comment. And then a number of years later, he came out with a book called The Singularity is Near, in which he discussed how all of this technology was advancing, and he put all his thoughts coherently together in a really good book. This is the new version. The Singularity is Nearer is the latest version. So if you read this, you don't have to read the first one. And so the point here is that technology has been growing not at a linear rate, not 1, 2, 3, 4, 5, 6, 7, 8, how fast can it grow, but rather at an exponential rate, which means that for every step you take forward, instead of going up one step, go so 1, 2, 3, 4, you double. So you go 1, 2, 4, 8, 16, 32, 64, 1, 22, 6, 5, 12, woo. And so that looks like what's called a power curve. It looks like this. And so therefore technology has been accelerating, as he points out and exhaustively documents, and it's a fascinating book. Technology has been growing at this exponential rate since the beginning of recorded human history, and perhaps even before that. And so I did a TEDx talk a few months ago on the history of technology and humans from fire to the singularity, which we should also put a link to in the comments, which is a very interesting 10 or 15 minute voyage through the growth of technology and where it is heading. And so when you think about things growing exponentially, which means effectively doubling every 12 to 18 months, and now it's actually doubling faster than every 12 months. If you think about how powerful ChatGPT is today, for example, it'll be twice as powerful next year and 4 times as powerful, 2 years from now. And so that's where, you've talked about quantum computing, which even Albert Einstein called that spooky science that he didn't even quite know how it worked, even though he was the world's smartest person. Right now, we have developers who are developing quantum computing chips. Microsoft came out with a very interesting first pass at a quantum chip. And these things promise power that is so far beyond our cognizance right now that it's impossible to see where this is going. And not to spoil give away the ending of Ray's book, The Singularity is Nearer, but where he posits is that this exponential growing technology will result in some amazing things, including full artificial general intelligence, where computers can do everything a person can and think about everything a person can think by 2029, 4 or 5 years from today. And within a few years after that, he believes this exponentially growing technology will have reached what he calls escape velocity for human longevity, which means right now every year that advances, medical science is getting more and more powerful, and we are letting people live longer and longer. My father, who turned 96 on Halloween, is currently more active than I am. He's finishing his third book. He's developing a giant museum in Accra, Ghana. He is running, all kinds of interesting projects and stuff. And so you can live, as Ray Kurzweil points out, by 2032, if we have truly reached escape velocity for human longevity, you may not die. We may be living effectively forever. And that's en route to something, an even bigger change, which is something that Ray calls the technological singularity. This is a term coined by Werner Ving and a bunch of others a number of years ago. But essentially, the idea behind the technological singularity is that within 20 years from today, he projects it at 2045, and he's been consistent on this projection for some 20 or 30 years now. He believes, and many other people are in that same camp with him, that by 2045, we will have reached a point where effectively computers and humans have merged. And that's not just we'll use computers for everything, but really, really have merged. And whether that means spreading our humanity, whatever that is, across the universe at the speed of light, or whether it means something else, whatever it is, it's so powerful that we cannot possibly envision it. And so therefore, you can think about it like 2045, 20 years from now, well before you are my age, David, we will reach a point where the world is so completely different, we cannot possibly conceivably imagine where that is going. And to be able to deal with that kind of future in your working life, and by the way, my working life, since I plan to be around to at least 135, if not forever, the important concept here is to understand exponential technological growth. And if you get that right, everything else follows.
Wow. I love that. There's so much that I don't even know what to respond to. I'll say this, that technical singularity will be super interesting, and to compare that to maybe what some would consider religious or spiritual beliefs is really interesting, because as storytellers, right, we always look for the stories that kind of help us explain these divine dimensions that we don't understand in the real world. And even in the quantum physics, the quantum mechanics, the quantum space concepts, I mean, some of those are still even so nascent, we can't even understand, how many molecules can I run in entanglement, right? How much can I move and be superposition? I mean, there's so many things just from that space. So this has been such an interesting conversation. And as we come to a close, just kind of really honing in on, what do founders need to see early in quantum technologies? What do you feel like is something early that people can start to hone in on in terms of these quantum concepts and combining them with their current tech stack?
Realistically, if let me put it this way, if Albert Einstein can be puzzled by quantum computing and quantum physics, so can all of us, right? And so I don't think at this point that it would be particularly productive for a founder to focus on any specifics about quantum. I mean, they're already used, quantum physics is already used in a number of ways. One really interesting company spun out of Google, it's called Sidewalk Labs, and they're doing things with quantum sensors to replace GPS by sensing the Earth's magnetic fields. And there are actual things that you can use quantum physics for today. Quantum computing, the goal that everybody is working to is what's known as quantum superiority, where a quantum computer can actually do things better, real things better than a traditional computer. We're not quite there yet. That's probably a few years off, but it's making amazing strides. And I have no doubt that within some period of time, single-digit years, quantum computing will be real. We will have quantum superiority, and we will be in a whole new world of computing. So I think right now, the important thing that everybody can do is get that exponential concept in place, because quantum computing fits nicely into that exponential growth scenario. And if you understand, if you have a mindset of exponential growth, then it'll let you be ready to absorb quantum computing and everything else that is coming down the pike.
Yeah, I love that because when I talk about quantum in general, people are like, "Oh, I'm adopting AI workloads," right? Like automation, and is really what they mean. And the story I typically tell people is like, yeah, what used to take me 100 hours, writing Cousteau SQL code for big data as an Azure data science to go through trillions of rows of data. I mean, that's what I would bang my head against a machine, pecking at the keyboard for 100 hours a week. I mean, this is just in 2020. This is only 5 years ago. I mean, now we can do that in just 1 hour. So how do we get that leverage,
Well, if
to
so,
that one
the
to
one in terms
1,000
of
or that 1 to 10,000 leverage?
sure, in terms of leverage for your listeners, the one
Right.
thing in terms of immediate stuff right now, the long term big core fundamental picture is this exponential growth concept. But the one thing right now that everybody should be trying is vibe coding. I don't know if you've had a chance to do vibe coding yourself. Vibe coding is a current buzzword that means letting people who are non-coders actually code using artificial intelligence to help them actually code. And so I haven't really coded as a programmer for probably 50 years, and I wasn't even good back then. But now, recently, through vibe coding, you can define what you want an application to look like. And then by just describing it to an AI, you collaboratively build it with the AI. And microcoding, you change this line, you change that image, you change this functionality, you refactor it, you do whatever you're going to do. And the result is that within a matter of literally of hours, I mean, I'm not even talking days or weeks, hours, you can create and deliver an entire full application that might have cost tens of thousands of dollars or hundreds of hours of programming time previously to do. So that's my one tip of the day for folks, which is vibe coding. Look at it and understand what you can do, because if you're a founder, a solo founder, or even a founder, part of a founding team, this can advance you much farther down the pike than you might ever have dreamed possible.
Yeah, I absolutely love that. Yes, we love vibe coding on this show. We have a couple of technologists who live vibe code with us on stream, and those are always so wonderful because you're exactly right. What typically would have maybe taken you tens or even thousands of of hours across your entire engineering team, you can certainly prototype very quickly. Now, there's of course an ongoing debate with those folks who are advanced with Cursor or make.com or N8N. Uh, ChatGPT has an agentic visualizer that they just recently launched. Of course, Figma is probably a top fiver up there. And also even canva.com, what was previously kind of like more of a marketing graphics firm and company has been going agentic as well. So yeah, we love that perspective. In terms of putting your investor hat though on, because I did put a little banner up here that said vibe coding with investor David S. Rose, which is just a cool little headliner. Where do you think the pricing model and real opportunity is with vibe coding?
I'm not sure as a vibe coding, there are a lot of vibe coding platforms, right? AI now is being applied to everything. And so would I invest in a vibe coding platform? It depends on who and what, and you'd have to look holistically, as I said before, with everything in the business. But in terms of vibe coding as a tool, as something really important for all of your listeners who are startup founders looking to create it, I would say that vibe coding as of right now is an essential tool in creating a business, because it lets you get a start, whereas before you may have had a wireframe or a mock-up or a demo, but you could now get to a literal working MVP, minimum viable product, of your solution yourself without a tech team, just with vibe coding. And I would love to see founders who are doing that, knowing that a platform you code today as a non-coder might be functionally efficient to do what you want done, but it's not going to be up to production level standards. But that will come, right? Ultimately, the systems will be better and better. You'll be able to have automated platforms that will take your vibe coding thing and make sure all the dependencies and security and stuff are all there. Or you'll be able to have programmers, the few programmers who remain as super high level programmers, recode your entire vibe coded app. But I think that this is a important thing for founders today, to use this as a tool in their toolbox.
That's wonderful. I totally agree with you. And it's almost like if you don't see an emerging technology, whether it's automation with tech or real AI workflows, or even quantum concepts, maybe you might pass on more of a traditional startup that doesn't have a technology investment. Would that be pretty true around the case these days? I mean, obviously we had the big AI bubble in 21, 22. That's kind of softening. We're seeing some of the H200 chips with NVIDIA and Google have more of these hybrid go-to-market solutions, even internationally. You know, China coming back recently and saying, oh, yeah, well, with SoftBank and ChatGPT, Microsoft and the US government actually make some of these massive investments from infrastructure. So you need the infrastructure for the hybrid workloads, but quantum is so early on. I mean, how often do you turn away a startup if they don't have an emerging tech focus?
Well, it's not, again, the focus shouldn't be necessarily on emerging tech qua emerging tech. It's not that I invest in emerging tech companies. It's I invest in companies that holistically are able to point at a market, see a challenge in the market, come up with a solution, and then appropriately use technology to conquer that market, right? So if you're looking at a company today, the assumption is that they are using AI in either for everything or for some things. There is a very interesting company that's recently gotten a little bit of news called Boardy, Boardy, and they are creating a platform for connectivity and investment that is 100% AI based. You only interact with the AI itself, the AI persona, and you can call Boardy by voice, you can WhatsApp with Boardy, you can email Boardy, and Boardy goes out and it connects you with people. I'm actually a venture partner, or whatever they're calling it, a venture scout for Boardy, and I can introduce you into the platform if you're looking to raise funds. But Boardy's idea is to get to know personally, as much as an AI can be personal, every founder who's just starting out looking for capital, because if you do this at scale, and Boardy knows, a million founders, and with AI, there's no reason why it can't own a million founders, then it can connect them to a million investors. There aren't a million investors yet, but there's no reason why every investor shouldn't be there. And if you now have AI working at scale to introduce founders to investors, that gets to be a very, very efficient platform. So that's the kind of thing that you're looking at in terms of a pure AI platform. But for every other platform, I don't care if you're raising carrots in your backyard, there is AI, there is technology that you should be using, not because it makes you a sexier company, but because it allows you to do whatever you're doing better, faster, cheaper, and quicker. And if you don't do it, someone else will be there and will eat your lunch.
I love it. Don't let someone eat your lunch because they're doing it better, faster, stronger. David, it's been such a pleasure having you. What is the best way for people to stay connected with you?
Sure. My website, davidsrose.com,
All right.
DAVIDSROSE.com, has a bunch of stuff, bio, background, various things, videos that I've recorded, books that I've written and stuff. It also has a contact section there in the upper right, where that is basically every single conceivable thing you might want to do with me. And the direct link as to how to get there and who to talk to. And so under the heading of scaled access, whether you're looking for advice on being a startup, information on how to become an angel investor, where to buy my books, how to get me to record a video pep talk for you, whatever, it's all there. So that's my suggestion.
Yeah, that's wonderful. Well, it's been a pleasure having you on the show. And we do have a special anchor segment, which we'll close with, which is Beyond the Bag. And I have a very special item today. It's my on the go notebook. So when I'm traveling, I love to go on the go. And what I do with this notebook is I take the date at the top. It has a different date for each day. And I circle the month and the calendar date. And what's great is that I don't have to worry about it being in any chronological order. I can kind of put it in a order of importance. Of course, I have a regular notebook. David, I know you probably travel a lot. I'm curious, is there anything in your bag that you typically carry with you, or maybe even within reaching of your desk there, that you would say, yeah, this is my trusty, whatever it is? Looks like you might have something.
my nano charger in my pocket. I do not leave home without it, right? You never know when you're going to need, a battery, right? And so I carry in my pocket literally 24/7, except when I'm sleeping. This wonderful, it's from Anchor. It's a wonderful, tiny little high-powered charging nub. And then on my key ring, I actually have a interesting little cable. So here, between a nano charger and a nano micro cable that's 6 ways and can connect to USB-C on both ends, or Lightning, or USB-A, put these in your pocket. You will never be at a loss for power.
I love it. Never a loss for power, David. You're such an interesting human being. It has been such a pleasure. I'm going to have to get myself one of those Anchor chargers. And if I don't bring mine, you will. So we'll always have power and charge, whether you have any of the adapters that come out today. I love that. So I don't think I've ever actually seen a nano charger before. So that's pretty awesome. Wonderful. Well, with that, folks, we're going to close out this show. It's been an extreme pleasure, David S. Rose, to have you on the David Daily episode 22. I'm excited to get some of these clips cut up and see these on the social medias. And in terms of next year and Christmas, will you be traveling much this year for the season? Will you be over the holidays with family? You said you had some children. What's holidays look like for you?
I'm here in New York, and New York is the #1 travel destination in the holiday season for people around the world coming to New York. And so my philosophy and our family's philosophy is, hey, if everybody in the world was coming to New York, there's a lot of good stuff here. So we tend to have staycations here in New York and soak up all that the city has to offer during the holiday season, which is very special and very cool.
Yeah, that's wonderful. You got to get down to Rockefeller, or, there's so much Christmas spirit. I mean, Saxon Fifth, Central Park. There's so many wonderful things to see in Manhattan, of course, and the surrounding boroughs. Not to be mentioned, we love Manhattan on this show. So yeah, that's wonderful. We're going to run the outro, David. What a pleasure. And folks, we'll see you tomorrow on the David Daily.